Agenda, second item on the agenda is consideration of minutes from the Finance Committee meeting held on April 21st, 2014. Are there any additions, corrections, et cetera? There being none, I would entertain a motion to approve.
So moved.
Do I have a second?
Second.
All in favor?
Aye.
Aye.
Okay, the minutes are approved unanimously. The next item on our agenda is the Annual Cemetery Commission report that's going to be presented by Colin Sylvester, the chairman of the Cemetery Commission. Welcome.
Thank you, Mr. Chairman. As you stated, I stand before you tonight pursuant to the bylaws of the Lake Forest Cemetery Commission, which requires us to present an annual report to the Finance Committee of the city. Next slide, please. I would like to just take 1 minute to read the mission statement, which was adopted just over a year ago of the commission. We see our mission is to safeguard the remains entrusted to us by establishing and fairly enforcing the policies governing the cemetery's use, ensuring its financial integrity, and enhancing the beauty of the cemetery site and natural resources for current and future generations. We have at the council's direction an investment policy which we have charged the investment manager of these commission's funds to follow, and they are laid out as you see on the screen, relating to the objectives of the fund, the responsibility and delegation of authority, just general prudence in asset allocation targets, which authorized investments we can invest in, and investment goals and benchmarks, certain prohibited investments, to identify conflicts of interest, and normal accounting cash management controls, reporting and audit measures. I would like to bring your attention to the pie charts which are before you. This relates to the financial history under the present manager, which is William Blair of the city. You will note that they took over in August of 2008. The fund at that point was $3.1 million. It has been managed up to last year when it hit just over $4 million. And this year, I have to make one proviso here. It does show at the end of the city's fiscal year, April 2014, a figure of 4.967. We have, however, in this last data, included a section of cash which is under the city's management, but actually belongs in the commission's accounts. So we thought it prudent to show that as really an investment which pertains to the Cemetery Commission. That is of the order of 400,000. So on a comparable basis, the figure would be 4.0 to about 4.5. The reason really for including that cash is that it represents, and we'll see this on a later slide, a de facto fixed income proportion, which the manager has had considerable concern about, and we'll switch to that next slide now. We show 4 types of investments here: cash, fixed income, domestic equities, and international equities. We're in compliance with all of those guidelines which are laid down in the policy. You will note, however, that the fixed income line at 13.1 is outside the scope of the 20 to 40%, but with the concurrence of the commission, the manager is including here the cash, as I said, as a de facto fixed income, really to avoid a potential loss of principal if interest rates invert in the near future. Very importantly, the Cemetery Commission has been operating under a certain debt requirement, obligations, And I'm pleased to report that as of the end of this as of the end of this calendar year, in December, we will have repaid all of that debt. The Commission will therefore have no outstanding bonds and will be able to apply the $142,000, which we've been using to repay principal and interest. That will be available to the Commission for future projects, primarily capital projects. As I mentioned, the Commission appointed William Blair in 2008 as the manager of the endowment fund. The Commission considered at its recent meeting that it would be timely to review the performance of the manager and to put the endowment management task out to a bid to see if we were up to date, we were getting the best advice, and if somebody else had a better mousetrap. So we have invited certain investment firms to bid on this, and the request for proposal will be on the city's website as a public document in the near future. We have I'd like to say on the record that we have no problem with the present manager. We just think it's a prudent management item to review after 5 or 6 years, that we just ask the question whether or not we want to make a change. Okay, basically that concludes my report, and I'll be happy to respond to any questions.
Any questions from the Finance Committee? I actually have one. You're going to get used to this because I think I asked you the same question last year. I look at the performance summary that you presented in the package that identifies, since inception 2008, the equity portion of the portfolio has performed at about 6.7%. The S&P 500 has been at 9.1% for that same period. Have you considered indexing all or a significant portion of that portfolio?
Actually, it was your question last year, Mr. Chairman, which really raised the issue, and we thought that the most prudent way of addressing that would be to invite different suppliers of this expertise, some of whom use passive and some use active management, and we have made a specific point of requesting a passive manager to approach the Commission with that in mind, and we are very much on board with that idea that if there's a lower cost way of skinning a cat, we would like to know about it.
Yep. Okay.
So hopefully we'll be in a better position to respond to your question in a few months.
Okay. Thank you. Any other questions that were motivated by the last conversation? Okay, well, thank you very much for the report. It looks like things are in pretty good shape, so keep up the good work. And it sounds like you're doing the right things in terms of keeping keeping it fresh. So, thank you.
Thank you very much.
The next item on our agenda is the budget calendar, which will be presented by Elizabeth Holub.
Thank you, Chairman Pantaleon. We are beginning to think about the fiscal year 2016 budget preparation process. And so as we got started, included on page 24 of your meeting packet is a draft budget calendar for that, just general outline of the flow of the process. No changes are recommended to the format or the timing for this year. And we did identify the 2 budget workshops for the Finance Committee meetings in November as being Monday, November 10th, and the operating budget in March being March 9th. Those, consistent with fiscal year 2015, are off meeting nights that tended to work well this year and seemed to be positively received by the committee, so we assumed that we would take that approach this year. However, I just pointed out in the cover memo that the November 10th date will fall the day before the November 11th Veterans Day holiday. So we wanted to bring that to your attention to see if that was going to pose any issues and if you wanted to look at rescheduling that capital budget workshop date.
Anybody have issues with that date other than me?
I might.
Yeah, I have a board meeting that day, business board meeting, and it may get rescheduled, but for now, it'd be a direct conflict.
We can look for alternative dates. And we're also working off the assumption that you enjoyed the, or appreciated the meetings, workshop-type meetings out at Municipal Services, so that's what we will do again.
Okay?
I shouldn't say enjoy, that's probably too strong of a word for a budget meeting, but.
We found them valuable.
Yeah, that's right.
Okay. So that's just a point of information? Mm-hmm. Okay. The next item on the agenda is the scoring matrix for the capital improvement program. A proposed revision is being presented to us, and the finance department is looking for input from us. So I'd be interested in any comments that you have on the scoring matrix?
By way of introduction, this matrix has been used for several years in developing the capital budget at the staff level. But it has primarily been focused on public works, construction, and infrastructure-related projects, and other departments have had difficulty using the scoring matrix because of its gear towards public works construction. So the draft included in your packet on page 25 was an attempt to modify that matrix to begin to be more amenable and more workable by the other departments on other types of capital projects. But what we wanted to make sure before we finalized this was that we'd identified the criteria that the committee felt was important in scoring these and ranking these from a priority perspective for your capital budget workshop meeting.
Does this scoring have anything to do with the accuracy of the budget amount to the allocated amount?
It does not have anything to do with the cost estimate of the project. What it does is it assists us in the initial prioritization of priority 1, 2, and 3
that part, okay.
for the presentation to the
Sorry.
committee. That's okay.
I'm familiar
Great
with that. I
question.
just didn't get the name.
Well, and to piggyback on what Elizabeth said, it's important for us to develop this year because the council directed us for the FY16 budget and going forward that we actually look at every year just are tying expenses to revenues going forward. And so it isn't just a laundry list of what those outlined capital projects are, but they would actually be tied back. So we will show you, based on anticipated revenues, here's what you can address in priority 1, priority 2, priority 3. And more importantly is if we have something in a 2 or 3 and you think it should be a 1, then we have that conversation about what moves up and then what has to move down in order to balance the budget from a capital standpoint. So that's why it's very critical that we internally have this, because this is how we're going to develop the ranking system that we'll bring forward to you in November.
I actually had a couple of comments about the matrix. Are there other?
Let me just ask, I didn't know such a matrix existed. I'm delighted to know that it does. My sense of this is if it's being used for the first time this year by departments that hadn't used it so comfortably before, I'm assuming that it would be something that could be modified in the future if it needed to be. So one of the ways you find out if something like this works is you try it.
Right.
And if it does, that's great. And maybe some new categories will, it looks like if you've gone to 11, you're not stuck at 10, so you could go to 12 or 13 and we could pull something off or something. So I would love to hear how, in fact, there may be other modifications, but I have no modifications to suggest, but I'd love to know how it works, and it looks like it could be an incredibly useful tool. That's it.
Just a question for clarity. On the form itself, there's a ranking of the numbers 1 through 11. Is that intended to be a priority ranking, or is that just the order that they were listed on the form?
It's not intended, and I will tell you at a staff level, we've even talked about changing the order of them to indicate more significance on importance. So, thank you. Point well taken.
Other comments? I would suggest adding I don't know quite how to do this, but sort of the form of a question about particularly, well, they're all capital projects, but if they're, especially if they're public works or maintenance type repair and replacement, is there an economically viable way to rehabilitate whatever it is rather than replacing it? And an estimate of what kind of extension of its life can be achieved with with a significant investment in, say, maintenance or rehabilitation, what have you. I mean, I'm thinking in the case of roofs, you make a projection, you think the roof's going to be used up in 5 years, and then you get to year 4 and you find that it's not leaking, and if you do some aggressive maintenance, you could get another 5 years out of it. That, I think that analysis should be brought into this process, and it probably is, but I didn't see it on the form.
Yep. Thank you.
Elizabeth, I think this is great. I had one other comment kind of outside the scope of the matrix, and I'm sure it's not going to thrill all the department heads. We're really good about looking at 5-year capital plans. I think we need to be looking at 10-year capital plans as well. Maybe not in as much detail as the 5-year plan, but I'm constantly have this vision in my mind about you up at the podium showing when the lines cross. And I think we need to be looking at more than 5. I think we need to be looking at 10 or more. So even if it's not in kind of the granular detail that you look at in the 5-year capital plan, I think the 10-year planning is important as well.
Okay.
Just another question. Are the consulting fees that are typically generated in order to determine which capital project or the scope of the capital project, are those consulting fees part of the capital budget?
Typically, for example, the architectural and engineering costs associated with design or planning of a particular project is included in the cost of the project. But there are occasions when a particular project has not been approved yet, and so that preliminary work is done from the operating budget to get us to that point.
For clarification, in the water plant, we have a consulting group that helps us with our decision-making. It's an established plant with future projects. Is that consultant capital or expense?
The consultant would tend to be operating unless they're working on studying a specific capital aspect that's already identified in the plan.
And are those subjective choices, or are those, and I keep forgetting what you do with, because we do GAAP, you do, what's it called again?
We do GAAP, it's just fund accounting varies from the private sector accounting.
Okay. Under those principles, are they strict about that, or?
No.
No, okay.
They are not.
That's all I had.
Other comments, questions? Okay, thank you, everybody. The next item on our agenda is a description of, or if necessary, if desired by the council, we have some supplemental appropriations that are going to be addressed at the city council meeting, and Elizabeth is available to discuss those now in advance so that we can move through the agenda a little more quickly in the city council. Yes,
I would like further explanation. I read that over twice last night, and I must say I didn't get it.
The supplemental appropriation ordinance is typically presented to you in April, and we use estimates provided by the operating departments on how their actual expenditures are going to turn out in the fiscal year to identify the need for a supplemental appropriation. So in April this year for FY14, you had a supplemental appropriation ordinance for the Ellowa Farm Fund because of the new operating agreement, we were transferring those assets to the foundation and closing the Ellowa Fund. That was the only item that came up at the time that needed a supplemental appropriation. Subsequent to the fiscal year end, we learned that due to two circumstances, there was a need for supplemental appropriations in other funds. In order to meet our requirement of legal compliance with the appropriation ordinance, we then needed to come to you for a supplemental appropriation subsequent to year end. The two specific items were first in the self-insurance fund, and what happened is that our year-to-year claims for medical and dental insurance, which is a self-funded program, were running very much on track with the budget through February. In March and April, we were hit with significant claims that we did not anticipate, and that necessitated a supplemental appropriation because those are charged to fiscal year 14. It was also complicated by the required incurred but not reported liability that is an accounting function for audit purposes for claims that have occurred prior to April 30th, but for which we don't pay the claims until after. We have to book a liability and expense and estimate of that. So that necessitated the first supplemental appropriation. The second related to the Fire Pension Board.
That was the one I had.
Okay, and the Fire Pension Fund and the Police Pension Fund are both accounted, the accounting is done by Lauterbach and Amon, a separate accounting firm. And they send to us monthly compilations of financials about the 15th to the 20th of the month. What happened is that in March and April, 2 former participants in the Fire Pension Fund left employment and requested a refund of their contribution. So the employee contributes a percentage of pay, the city contributes, but if a person leaves employment and doesn't anticipate desiring a pension benefit or vesting to allow for a pension benefit when they retire, they can have their portion of contributions refunded. And we had 2 of those, one in March and one in April, and that resulted in the total Fire Pension Fund expenditures exceeding the appropriation ordinance.
Got it.
Any other questions? Thank you. I had the same questions, by the way. I just had the benefit of talking to Elizabeth before the meeting. So, the next item on our agenda is other business. There was a copy of the flash report distributed. Are there any questions or observations about the flash report? Did everybody, we have a couple of, this is probably the first flash report that a couple of our aldermen have seen. If you have questions about it.
I did have a question on the water
Oh.
and sewer capital line. I don't understand how the expenses could be so much higher than 8% of the year lapsed.
This is primarily due to significant capital expenditures occurring at the front end of the year. So much of their construction has to occur during the summer season. So you'll see a lot of those capital improvements occur in the first 3 months or at the tail end of the year in March or April.
So in the course of the next several months, we should see that moderate?
Yes,
And then
absolutely.
potentially kick up again? Mm-hmm. And then the self-insurance line you just spoke about, as it relates to the flash report as well?
Right,
Got it.
right.
Thank you.
And I'm sure either Elizabeth or I would be happy to talk you through the flash report and how to interpret it, how to read it, because it's not immediately obvious. It's evolved because of some peculiarities in the way the accounting is done and so forth. So, so happy to provide any input if there's any lack of clarity there.
Let's do that one more time.
Okay.
Take us through it.
Now? Okay.
Right now.
Okay.
If it's okay with everybody else.
Sure.
Thank you.
Okay, first page, 29, or 26, excuse me, of your packet. This is intended to give you a very high-level snapshot of where the city is from a budget perspective overall. You've got primary funds identified as well as groups of funds, such as debt service funds, are all grouped together. You can see what the budget for the year is and the actual year-to-date for both revenues and expenses. And then the calendar year, or this current year percentage received or current year percentages expended is simply the actual year-to-date divided by the budget. Then we include a fourth column for both, that is the 3-year average, which is the 3 prior years, to give you a perspective on whether or not this year is in line with prior years. Because the timing of revenues and expenditures will vary from fund to fund, and so it's hard to take a straight line based on the percentage of year that's gone by. And then we try to take significant variations and identify those in the footnotes so that you have an explanation for those that are significantly different from the 3-year average. Any questions on that page?
So, and let me give a little color behind that. Because so many of these accounts have quite a bit of seasonality to them, we were getting what we had before was roughly, it was sort of equivalent to a variance report that you might expect, but it was every issue, virtually every issue was a timing issue. So the net value of it in terms of are we okay, are we tracking, are we not tracking, was really limited by so much seasonality in the numbers. So after much back and forth about 2 years ago, shortly after Elizabeth joined us, we sat down and came up with this methodology with Elizabeth's input, which once you get used to it, it's actually pretty useful. And it's certainly much more valuable and more indicative of how we're doing, quote unquote, than the prior approach that was taken. So it's not it doesn't immediately become obvious what's going on here, but once you approach it from that point of view, you kind of scan down the columns, and if you see two numbers that are widely divergent in the current year versus the 3-year average, and there's no explanation, or there's an explanation you don't like, that's the way to look through that.
Thank you. The next page, 27, is the basic financial flash report. What we've done here is tried to identify certain key revenues that the Finance Committee has indicated a desire to track. And you'll see those separated between the general fund and the water fund. But the general fund, these are the major variable revenues. We do take the annual budget and divide it down by month based on the prior year collection so that we can compare the year-to-date information to the amount budgeted. And you will see both the current month as well as the prior month, the year-to-date revenue and the variance to budget, so that you can see from May to June what has changed from a variance standpoint. And I would also just note that the summary on the previous page was May. You'll always see that on a 1-month lag because the timing required to close out the month. We want to give you final month-end numbers on that summary, but then the rest of the pages are more current. So you're seeing June instead of May. And then real estate transfer tax, we record a liability for transfers that in which someone is purchasing and selling within Lake Forest. And so that's the difference between the gross and net revenue, because we're booking a liability for the ability of that person to seek a refund of the real estate transfer tax. And then you can see the total number of properties to date that have changed compared to the FY15 budget. Then the next section is water revenues, same as the general fund variable revenues. You can see both the current year and the current month and the prior month, year to date, and variance to budget. And then pump versus metered is an issue that was a concern of the city several years ago. And so we track the unaccounted for water as a percentage, running trend, and you'll see that also on a 1-month lag. And I would just note that 20%, 21.7% is high, and that is because of the water that's being returned to Lake Bluff. And so because that's not being billed, and that was water that was given to us in the fall, that's driving that unbilled percentage higher. And once that stops, we'll see those numbers drop back down to more normal numbers. And then the final section is just related to the change that was approved by the council in December of 2013, which provided specific authority regarding adjustments and waivers of fees for the city manager. And anything over $1,000 is reported to the Finance Committee on the flash report. So in this case, you see one that's related to a service line leak. And so it was a reduction on the water bill, and that's in accordance with city policy. Then the next page is
Excuse me,
I'm sorry.
Before you leave that page, the state's 2 months behind. What recourse do we have?
None.
None. So what do we do?
That's an improvement, by the way. It was as high as 5 months about a year and a half ago. They've got it down to 2 months. That's been pretty consistent for the last 6 or 8 months, I would say. Elizabeth, am I getting those,
Yeah,
that timing right?
it's been as high as 5. They got down to 1 month earlier this year, but then they went back to 2 months, and it's really a cash flow situation for the state. But it's not segregated like it is for sales tax. So there is a timing issue on that being received. And that's universal. It's all governments across the state are seeing the same delay.
And landlords.
I think, Alderman, to answer your question, what can be done, there's been attempt, actually, I think our own State Representative Scott Dewey tried to introduce legislation that would mandate that the state had to pay their bills on time, but it never made it out of committee.
So in the meantime, does the state provide a line of credit through financial institutions that we can borrow at zero cost? No.
No.
Our credit's better than theirs is.
I know.
Yeah.
But
the only other option, and this is one of the reasons the state, I think, has gotten a little better, is that there are penalties, and Elizabeth might know what the percentages are. So if the state doesn't pay you in a certain amount of time, then they have to pay you with interest.
okay.
And I can't remember what that interest rate is, but there's a good penalty associated with that. But most businesses, vendors still want their money on time and not 4 months late.
Thank you.
Well, and that also plays into some of the other budgeting and planning issues that we have, because this is just one aspect of the potential risks to the city of the state being in the condition that it's in. You have the sort of the pension issue, potential attachments have been proposed of income tax rebates, because they collect our income tax and then rebate it to us. Sales tax, I believe, is the same. And there have been discussions and proposals in the legislature to eliminate those those rebates, or cut them back or delay them in order to pay the past due amounts that the state has, which creates, you'll see when we go, I'm sure when we go through the budget process, which is going to start here any minute, you'll see some of the challenges that all puts in front of us. So,
Thank
but
you.
it's usually I comment on it, but it at 2 months I'm dulled, you know. It doesn't seem so bad.
The next few pages are detailed statistics related to real estate transfer tax that the Finance Committee has indicated a desire to keep track of. Page 28 just shows exempt stamps issued by month between the current year and prior year. No tax is generated from those exempt transactions, but there is an administrative fee that is paid for processing.
And for background, could you just describe what those exempt transactions are?
They vary. Code sets out certain circumstances that are exempt, but if a person is not just changing deeds, revising deeds, if there's a governmental entity that's either the buyer or the seller, in certain cases related to affordable housing, there's an exemption. So there's about 8 or 9 specific circumstances under which they have to specify the code provision for which they're applying for an exemption.
We do follow the, excuse me, the state real estate transfer tax as far as the exemptions go. They also include nominal consideration transfers, things of that nature. So if someone needs to get is exempt from getting a transfer stamp from the county, which is required for all transactions, that will also be reflected in their exemption from the city.
The next page on 29 provides some additional detail that just provides the activity, the gross and net revenue by month, just to drill down a little bit more from the summary on the earlier page. And then page 30 does separate the revenue between commercial and residential. Commercial transactions have a significant impact on the revenue, but they're not recurring. So it's nice to report those separately to show the impact of commercial transactions on the total revenue being received in any given year. You can see there's been no commercial transactions yet in the first 2 months of the fiscal year. And then the last page, 31, is an effort to show historically what has happened to residential sales. It's very summary information, but it shows both exempt and taxable transfers for residential only, the gross RETT revenue, and the average revenue per transfer, which we then use to calculate an average sales price for that year. So you have from inception of the real estate transfer tax to current, and you can see how those average sales prices are changing over time. And then the chart shows that average revenue on a monthly basis for the last 3 years, just to allow the Finance Committee to track what we're seeing in Lake Forest.
And actually, one thing that's occurred to me, and we maybe should talk about this offline, is this was developed, all this detail on the real estate transfer tax was developed shortly after it was implemented. And I understand why you would have wanted that when you were just starting out, but at this point, it seems like the flash report is 2/3, or more about the real estate transfer tax, so I think we may look at consolidating some of that information.
I would agree with that.
So, other questions or comments about the flash report? One thing that's pretty clear is that number of transactions for residential sales are up significantly over the last 2 or 3 years. And also values are improving in terms of the average value of the transactions, which is a number that can be significantly skewed by 1 or 2 large transactions. So you have to take it with a bit of a grain of salt, but still, the trend is pretty clear. Things are getting better. If that's all on the flash report, we can move on to an opportunity for the public to address the Finance Committee. Are there any members of the public that would like to address the Finance Committee? You'll have another opportunity in front of the City Council later on. And there being none, I would then entertain a motion to adjourn.
So moved.
Do I have a second?
Second.
All in favor?
Aye.
Motion passes. Meeting is adjourned. Thank you.
And we will begin City Council meeting in approximately 5 minutes, 7:15.